What is the purpose of all of this? I guess that's the key. The purpose of this is really to ensure that for the consumer, that really does start to drive down the cost.
Hello and welcome. My name is Brian Caplen, editor of The Banker, presenting a masterclass on the changing dynamics and landscape of payments together with Lloyds Bank. And here with me to discuss the latest developments in the cards business is Aidene Walsh, who's Director of Commercial Cards and Acquiring Solutions. So Aidene, tell me, what are the big challenges facing the card business at the moment?
So Brian, thank you very much for the time today. There are probably 3 or 4 big challenges within cards at this point in time. One is regulation.
Yeah.
Another is innovation and really how to embrace that, whether it's in commercial cards or acquiring. And I would say the third big thing is really around data and moving data from being a basic hygiene factor to really starting to drive insights and improve business models for our clients.
Okay, let's start with the regulation, because obviously that's been the bête noire of bankers now for the last 4 or 5 years. We know all about Basel III, but how does it affect the cards business?
So I would say when I look at regulation, it's probably fair to say that it's been more focused on the acquiring side than it has on the commercial cards, although there are a few things still to be clarified in commercial cards. But within acquiring, we've probably seen more regulation in the last 6 months than we've seen in the last 20 years. There's a huge focus at this point in time around interchange. And since the beginning of the year, what we've done is we've seen the introduction of a cross-border acquiring programme with Visa to satisfy some of the EU regulation requirements. We've also seen with HMT in the UK a move towards speedier settlement for our merchants. In March, we saw Visa debit repricing for our merchants to basically again respond to EU regulatory requirements. And through the end of this year, we will see implementation of an EU regulation in the UK around, again, interchange. What is the purpose of all of this? I guess that's the key. The purpose of this is really to ensure that for the consumer, that really does start to drive down the cost. So it drives down the cost, first of all, for merchants and then ultimately for the consumer.
Okay, but one of the interesting things is there's kind of a link between regulation and innovation, isn't there? Because, first of all, we get the regulation, everybody complains about it, says it's going to make our life harder. And then somehow I think banks start to realise that, and merchants start to realise that there's some upside to this, because you can actually, drive forward innovation with it. And you mentioned innovation as a big thing on the horizon now. I mean, how's regulation driving forward with the innovation, and what are the key innovations in the cards area at the moment?
I think as we look at the innovation, there's 2 aspects to it. Is one of the ways in looking at how we implement the regulation with our merchants on the acquiring side, we're actually looking at how we innovate the client experience. Because we're moving away from some of the pricing approaches that we've had in the past, and we're actually looking at how we make things much more transparent. So I would say in implementing that regulation, a lot of that is just around innovating the client experience and actually responding to where merchants want to take that benefit next. Much more around innovation, particularly in both businesses, is really starting to look at creating a delighted customer experience for their end customers, whether they are businesses or whether they're consumers. And in looking at some of the innovation that's taking place within the industry, if we look at commercial cards, there's a big move from the basic plastic card towards virtual solutions, and really starting to look at some of the insights that brings into a business model to really drive working capital, to really drive supplier management.
Because this is really interesting, because you don't really think of a commercial card driving working capital and sort of buying policies, but clearly you're saying it does have that potential.
Well, it's really interesting actually, because when we talk to a lot of corporates, and in some cases it can even be large corporates and also FIs as well, because we're doing a lot of work at this point in time with financial institutions in the UK. I think a lot of people start out from, it's a piece of plastic and what I'm going to use it for is my travel and entertainment. And actually, once they get that moment of truth where they actually realise that it's something that can be absolutely embedded in an overall purchasing process, or even at an end state taken into procurement process and really used to enhance a supplier management process, then they really do start to see the benefits of what it can do for their working capital. And it's not only for working capital, it's also for data management. So the insight that can drive in terms of, we're using 25 airlines for our travel when actually, and they're all going to one destination, so therefore there's an ability to rationalise. It can also drive fraud management as well. But much more importantly, it's really starting to move now into much more predictive analysis. So actually, if we're starting to see that our employees are doing this, for example, 25 days a year, how might we expect that behaviour to evolve over the next 2 years?
Okay, now you touched on the data management there. I mean, we hear a lot about big data and what it can do for a business. Just tell us how the data works in relation to the cards business.
So I'm going to talk about both in this situation. So maybe I'll start off with the acquiring because the whole data conversation has evolved tremendously in the last couple of years. And in some cases it's quite frightening actually what can be done with data, but I think it's also very rewarding. So let me just highlight first of all, Lloyds Bank is one of the biggest issuers of cards in the UK to individuals like ourselves. And with that, comes a huge amount of insight around, consumer spending behaviour that can be used very much on an anonymised basis, but can be used to inform large merchants around behaviours and what they should be doing if they want to max out on their business opportunities. So one of the basic aspects of data that's evolving now is really, if I'm a merchant, if I'm a grocery store or what have you, I want to know where individuals spend when they don't spend with me. And I want to get insights as to what I should be doing on a much more informed basis in order to improve my business model. So there are lots of models out there now in terms of taking that data to the next stage, whereby it's able to present that analysis back to larger corporates and say, when someone is spending with you, this is how they behave. And here are some of the things that you might think.
And then you can use that information to basically target products and services at them.
It's to target product and services, but it's also to build loyalty.
Okay.
So there's a one-off. So when we look at merchants in the UK or any type of company in the UK that's accepting cards for whatever purpose, there's two key things. They do want insights, but why do I want an insight? I want an insight in order to build that loyalty so that I know that that customer will come again and again and use my products or services.
Aidene, lots of very exciting things there. Thank you very much.
Absolutely.